If they adopt greening measures, the greening measures can give them returns anywhere between 30% to 60% IRR. With some small, simple measures, they can make these changes, and these IRR they can reap within a payback period of 3 to 4 years.
Hi, everyone. Welcome to the Resilient Supply Chain Podcast. My name is Tom Raftery, and with me on the show today, I have my special guest, Nisha. Nisha, welcome to the podcast. Would you like to introduce yourself?
Thank you. Thank you so much for having me here. I'm truly honored. I am Nisha Kohli, CEO and founder of a company called CorpStage, which is based out of Singapore. So, pleasure to be here with you, Tom.
Great. Thanks, Nisha. And tell me, Nisha, a little bit about CorpStage. What is CorpStage? What does it do for whom?
Okay. So, CorpStage, as the name suggests, it's a stage where corporates perform. It's a platform for companies to manage and report their ESG KPIs. Now, who does it work for? I mean, it's for corporates, whether they are listed or non listed, or you can say small, medium sized, or large companies, which require to report for the stakeholders. Now, in those stakeholders could include your shareholders or your customer suppliers, but also the regulators these days, where ESG reporting has become mandatory. So, CorpStage platform is the multi reporting framework where it not only helps companies to report as per standards such as GRI, ISSB, or CSRD, but it also helps unlisted, non listed companies, such as even startups, to manage and track the KPIs and sustainable measures. So it's an all inclusive platform where companies start with their basic profile creation, stakeholder mapping, materiality analysis, risk and opportunity assessment, and then finally collecting data as per the standards. And artificial intelligence has been used to track carbon footprint as well as to create narrative based reporting on the platform itself. We also have project management module, which helps companies to track and monitor their KPIs as per their milestone basis.
Okay. And you're based out of Singapore.
Yeah.
Are you addressing the Southeast Asian market, the European market, the Americas, all of the above, none of the above?
Yeah, so the markets that we address primarily is APAC region, which is Asia. Now, in Asia, I would say even the GCC region is covered, and Australia as well, not New Zealand. If I say Asia Pacific, it doesn't cover New Zealand as of now, but we are focusing on Australia. We do have an entity in Austria, in Vienna. So we have plans to grow in European region. We have served a couple of clients earlier in the last 2-3 years, but the focus was primarily on Asia. But now we are, planning to grow in the European region as well.
And what's the kind of genesis of CorpStage? You're the founder as well as CEO. So what made you decide to set up the company?
Yeah, so I'm a chartered accountant by profession. Like my initial first degree was chartered accountancy. And then I went and did CFA. I'm an associate member of CFA. And then I'm also a PhD in corporate governance and social responsibility. So my career of overall, you can say 25 years has been in mix of corporates. I've worked at companies like Coca-Cola and Technometal, etc. But I've also worked as consultant for companies which are like large energy companies or power companies, etc. And then I've worked as academic person as well. Like I've done research, I've published papers in this field, and I've taught in universities across the world, such as American universities, if I can name them, Concordia, Temple University in Australia, in Asia, in Singapore. Yeah, so I've been an adjunct faculty member there. So overall, my career of 25 years has been mix of all these. But I would say 16 years has been in social responsibility and governance consulting totally. And out of those 16, 8 years have been in core sustainability and ESG area, where we actually consulted lots of companies, but also built this platform called CorpStage. So
Okay.
now to answer your question that why CorpStage is
Mhm.
basically when I was working with companies for helping them to raise impact funds, I was integrating sustainability into their strategies and helping them to integrate as well as communicate those sustainable measures to the impact investors so that they can raise money. But then I realized that it's very difficult for companies to do this, so they need somebody to help them out with this. And on the other hand, there's a whole world of passive investors. I would say out of the total investments that happen in the world today, 60% is, or maybe 70% is from passive investors. Those passive investors, they primarily focus on ratings and rankings. I mean, not now, but yes, 3 4 years down the line, before back, they were focusing on rating and rankings. Now these
Mm.
rating and rankings we cannot trust or completely. Like then I started interviewing these asset managers and I realized that they were looking for a platform or a measure to actively analyze the company for its ESG measures. They had their own models, etc. Then I thought that okay, these asset managers are using their own models to evaluate the company, but who is providing the data? So the company should be aware about ESG, should be doing corporate sustainability properly to provide right quality data to these investors. So there was a big, and even today we keep hearing, I attended tons of conferences and I heard from various stakeholders that there's a data challenge. So there's a huge data gap that exists even today and which existed earlier. So my vision was to help companies bring primary organic information which they create in their own entity, in their own company, directly to stakeholders. Of course, they would not be doing all the work that they do to the stakeholders, but then whatever is relevant, I mean, which can be verified or traced back to its origin. So that was my vision, and that's where we developed CorpStage.
Very good. And ESG has obviously exploded in complexity. I mean, there's an alphabet soup there of letters. You reel some of them off there: CSRD, ISSB, GRI, you name it. From your experience, what's the biggest pain point companies face when trying to get this right?
When I started looking at the platform, I was confused that which framework to adopt. Then I started looking at different frameworks and I found that there are more than 20 frameworks or maybe more, but we looked at
Mhm.
primary 20 frameworks. So it was June of 2020. Well, the world was going through COVID situation. So I recruited 9 to 10 summer interns from US universities and I gave them this task of mapping and aligning these ESG standards and frameworks. So we looked at 20 global frameworks. And then on the other hand, I mean, there were three groups which I formed. One was primarily looking at SDGs and ESG KPIs and mapping SDGs like 17 Sustainable Development Goals with ESG KPIs. That time that much of knowledge was not there in terms of published papers, etc. So I asked the interns to do that. And then on the other hand, we picked up 25 stock exchanges of the world to look at the corporate governance, social responsibility, and ESG requirements overall. What do they
Mhm.
have? And on the third team was basically looking at the 16 global frameworks and looking at that this particular code of standard matches with this one and SASB 77 industries. How do they relate to GRI and so on and so forth? To my surprise, while I started this work in June 2020, November 2020 itself, ISSB board was formed with the objective of collaborating. I mean, all the standards and frameworks, they collaborated and they said, okay, let's have one uniform framework for sustainability. And then we got the ISSB term came. I mean, the board was formed initially, but it took them about 6 to 7 months or maybe 1 year to appoint the board and to have the team in place. And they deliberated and they mapped and aligned. And finally, in 2023, we got the ISSB standards. So I was constantly following ISSB and making sure that CorpStage integrates everything, all recommendations from ISSB right from day one.
And what do you think is the biggest pain point for companies, though, when trying to report these standards?
Yeah, so the biggest pain point, of course, is the data challenge and understanding the particular standard requirements. So currently, for example, if a company is situated in Asia or in Singapore, they are required to do ISSB. But if they have operations in Europe as well, then they have to do CSRD. Now, if they do not understand the standard as such, if they do, then they would say, oh, these are same, this focuses on double materiality, this also focuses on double materiality, and everything is same. But it's like the form for them matters more than the substance. So they get confused with these forms, the requirements, and then, the biggest pain point is that they have to understand the gaps of what they are doing with the standard, and then because of the talent issues or because of the expertise in this area, then they look for consultants who can help them for each particular standard. That's where the cost for each company increases.
And let's talk about ways out of that then. I mean, you've built CorpStage around the idea that ESG isn't just compliance, it's competitive advantage. What does that look like in practice?
Yeah, so ESG in practice, I would say if a company does adopt greening measures, it is able to achieve anywhere between, initially we can say that 15 to 20% of the savings in terms of operational costs. So, and that is proven, today itself, I published an article on LinkedIn about the garment industry. Now, lately, under Trump's administration, the textile industry now is taxed heavily on the imports in US, which is like India. India, for example, is the biggest exporter. Vietnam also, they've been taxed heavily on textile and garment industry. Now, if let's say companies feel that, okay, there are tariffs and they will have, let's say, 10%, 20% revenue decline because of these tariffs, or let's say devaluation of currency, and the lack of competitiveness or reduced competitiveness. So then in that case, they would lose the exports. What is the next measure? The other measure is to diversify their market. Now let's look at the another alternative biggest market is either EU or Australia for Asian market, or Asian countries, right? So when we look at EU has got CBAM currently, which is Carbon Border Adjustment Mechanism, where they charge carbon taxes, which is currently, on an average, 70 euros per ton is charged on that. Now, if we look at that kind of cost, 70 euros per ton, then these companies who cannot export to US because of tariffs will diversify to Europe now or Australia. Even Australia today, in the news, it was that they are also looking at implementing CBAM measures. So if Europe has already done for 6 industries, they are looking at, expanding it to other industries. And already they have started factoring it for other industries as well. So if textile companies, they start exporting to EU, they'll be charged $50, 50 euros per ton or 70 euros per ton, within that range. So which one is better, to go to US or keep continuing US and increase the cost? I mean, with the tariffs, their revenues will be impacted, the cash flows will be impacted, or this one where they will be taxed on the CBAM. So if they adopt greening measures, the greening measures can give them returns anywhere between 30% to 60% IRR. With some small, simple measures, they can make these changes, and these IRR they can reap as within a payback period of 3 to 4 years. So they will benefit out of these greening measures and export to Europe. So that is the research I did, and I published an article on LinkedIn. Yeah. So
Okay.
this is what it means. And we have practiced it for logistics industry, for shipping industry, for many other industries. We have worked real estate, for example. So we have seen these kind of savings coming in.
Okay, you must share that LinkedIn link with me and I'll put it in the show notes so everyone has access to it. You said some easy enough greening measures that companies could undertake. What kind of greening measures are you talking about?
I would say there's a misconception, there's a confusion that whenever we say greening measures, companies think, oh, there's investment involved, so decarbonization measures and requires investment. But then there are certain activities which they can adopt without investing heavily. So just to give an example, in an African company where we worked, they were looking at decarbonizing their generators. Now in Africa, they cannot function without generators. So straight away not using generators and replacing them with some other measures would be very expensive investment for them. So what we suggested is that we suggested to use of scrubbers. I mean, that's where you can reduce your scope one. So it improves the efficiency of the generator. Those kind of measures. So for example, in the logistics company in Singapore, we suggested that managing their fleet properly so that they can track the distance, the time, the fuel consumed, etc., for the drivers, and then incentivize those drivers on the basis of that. So that would itself give them some benefit. Then there are recycling, circularity measures, which are basically generate, it's an opportunity. It's not just
Mm.
saving the cost, but it also giving revenue, when they recycle certain materials, or they may come up with an alternative new vertical also.
And I know you're working with AI, blockchain, even digital twins. Can you unpack how these tools actually make ESG reporting more transparent and not just more complicated?
Yeah. So when I talk about AI is basically used to automate things. As I said, that our platform is a multi-framework reporting platform. Now, with that, companies have a problem. Earlier when we mapped and aligned the frameworks, we thought we'll ask companies to fill in the data once, and then our system will put the data into different frameworks and give them automated reporting. But that kind of messaging did not work well for companies because of the regulation. So after 2022, these regulations started coming, and then companies said, oh, we want to do ISSB, we want to focus on CDP, we want to focus on CSRD. So they want the particular form to be provided and filled. So we went via that method as well, because our platform is very flexible that way. So we provided them different frameworks. But then now again, they've come back to that point that, oh, we don't want to fill up this manual information again and again for different standards, even though we have crystallized and demystified all the frameworks in a very simple language, everything. Then we came up with AI measures in late 2024. We started working on that. Now our platform actually automates that through AI. How it does, we can connect the ERP system of the company, and then ERP, I mean, there are certain modules of SAP, for example, you can connect to the system, and then you can extract the data through API integration into CorpStage platform, which automatically fills in the data. Then the other way to do is that you can simply upload your documents, like past year document, annual report or ESG report. You can upload and say, hey, this was the earlier that year's report. These are the initiatives of this year. What is my gap analysis? So it's like, AI is integrated to automate a lot of things for them. And then what we have done is, through this upload of document and ERP connection, as I said, CorpStage is a 360-degree platform. It enables materiality analysis on the platform. It does surveys, stakeholder engagement on the platform. So all those reports are created on the platform. So everything is there here. You can easily select, okay, I want to write the stakeholder section of my report. Choose this document, the list is available to you, and then automatically AI does the report creation for you. Normally, all other softwares, they provide you the ESG KPIs, EHS, or environmental KPIs, or those kind of things, and then companies download that data, or they may have Power BI, etc., to create those charts, and then they have to give it to another consultant to write a whole 200-page report for them, which is again to be mapped and aligned with the reporting framework. So they don't know whether it will be fully mapped with GRI or CSRD or not, right? In our case, you know that you have chosen, okay, I want to create today CSRD report. Here it is. And then whatever documents you have, just select all those, and automatically AI will create a CSRD reported framework. Of course, it will not be like 200% complete, but it will give you a good, I would say 70, 80 pages, so that you can work and enhance it on top of that.
And can you share a story, for example, for a customer where moving beyond box ticking compliance led to real business value, whether it's financial, reputational, or operational resilience?
Yeah. I mean, there are many such examples I can share that companies who have moved away from checkbox listing, actually they've proven to be leaders. So one such client was able to avail green finance. Actually, they came up with that motive in mind that, hey, can you help us doing ESG? We are not even required to do ESG, but can you help us? And we want to avail green finance. So that was possible. And then the other one, as I mentioned, our previous preliminary clients were focused on impact investments. So we were able to get them impact investments through integrating SDGs into this. And then lately, we worked with, as I said, logistics client, and they have started putting more focus on the tenders where ESG is required. So
Mm.
I think day before yesterday, I got an email, hey, we want to go for lead certification, so that we can get those tenders done. It's really helpful beyond the checkbox approach.
Great. And what about employees? Do you see ESG data making culture shifts, maybe helping with recruitment and retention, that kind of thing?
Yes, I mean, in our practical examples, there's still what we have seen. There's a hesitation from employees because of change, transformation, change management, which
Mm.
is required for integrating ESG. But as regards the attracting of new talent, yes, the new generation employees, they are looking at sustainability for sure. And that's how they get attracted to companies which are leaders in sustainability and ESG. Now, one reason for that is, of course, this generation is much more advanced and they really care about the environment. But on the other hand, they're also looking at their future career, that if the company is not sustainable, then what would happen, down the line, and what will
Hmm.
happen to their jobs, etc. So that's the thing that we are seeing in the market. And when it comes to CorpStage attracting talent, yes, we, even though we are a small company, we are able to attract people who are willing to work for us and they really enjoy. Yeah.
And looking ahead, what do you see as the biggest disruptor for sustainable supply chains? Is it like tariffs, carbon taxes, or maybe digital tools like ESG twins?
Yeah, so I would say yes, definitely the carbon tax mechanism, which is now happening, as I said, about Europe and in Australia as well, and even Middle East is becoming very serious about it because they have, through their decree law, they have implemented carbon measurements, scope 1 and 2 for the companies, but they are also thinking of leaving these for the imports in the region. So if
Mm.
that happens, that will be a game changer that will require a shift by companies to look at these things very seriously, even though they may not be mandated to report on certain frameworks, but just carbon footprinting and then making sure that their products are decarbonized will be essential, which will become very important. Now,
Mm.
to enable that, the digital tools such as at CorpStage, we provide the verification and validation of suppliers. So when I said that we have an active stakeholder engagement module, we have the supplier due diligence surveys and things like that. We use our three modules: corporate profile module, which enables suppliers to provide their basic information such as tax ID and incorporation ID, etc. Then they have the listing of certifications, which is very important by companies such as garment manufacturers or chemical companies. They require certain certifications from when they are buying products from suppliers. So we
Mm.
have that forms. And then the third one that we have is carbon footprint calculation. So by using these three or providing these three to our suppliers, to any supplier, we can verify and validate them that this, yes, they are legit and they are doing ESG, and then they can apply for tenders. So on our marketplace, now we are actually building that list of tenders and RFPs which require sustainable products. So in the coming months, you will see an AI matched supplier and RFP platform by CopStage. So that's in the work in progress by us. But yes, that's a digital tool that we are coming up with.
Nice, nice. And obviously, green finance, as you alluded to earlier, is another big lever. Do you see money finally flowing where the impact is, or are we still at kind of early lip service stage?
I would agree with you both that money is there, but also at a live service stage, a lot of new products have to be developed. Of course, a lot of things have been, because when I see it from past 4, 5 years, and I'm constantly in this space, sustainable finance as well as corporate sustainability space, I've seen a lot of developments have happened. And to mention about green finance, nowadays we also see sustainable trade finance, which is very good for trading and particularly that supports the supply chain.
Mm.
Overall, green finance, when linked to KPIs, can actually help companies to reduce their cost of capital or the weighted average cost of capital by 10 to 20 basis points. So that's very beneficial for companies. And we have seen companies, not directly through us, but we have seen large companies, taking a benefit of that. What we have helped is we have also worked in the field of green finance where the farmers community, etc., they are able to get sustainable finance or green finance which are linked to the impact that they create, such as water saving or using less fertilizer and things like that. So that has
Mm.
helped them to avail such facilities. Mhm.
And if you had a crystal ball, what do you think the supply chain of 2035 looks like?
Okay. So sustainable supply chain, I would say companies will have to choose between tariffs and taxes. that's that's fair. So supply chain should be flexible and scalable. If you want to make it costless, then you have to just in time is the measure or produce locally and adopt things locally rather than going global. But if that is the challenge, then I would say adopt greening measures, which will help you to get verified and validated and then trade globally.
And if you were sitting across from a supply chain leader who's just starting on this journey, what's one mindset shift that they really need to make?
The shift that they need to make, that business as usual to be converted to sustainable business model. That's the mind shift that they need to make. And whenever they are doing the mm, capital budgeting or say financial analysis for buying certain raw materials from one place or doing the entire analysis basically for the supply chain, then they should take into account the non-financial measures such as greening measures as well into that. And then looking at carbon tax or the carbon price as an active ingredient for those financial analysis, I think that would be a game changer because currently also only few companies are considering carbon as the pricing or carbon integrated in their analysis and everything. I
Hmm.
think that is required in going forward because today we are seeing the carbon price as 70 to 80 or maybe it will touch 100, but going forward, let's say 2050, it is estimated that it will go to 420 euros or something. So if that is the case, I mean 2050 is very far, but let's assume 2030 it will cross over 100. It will be a difficult situation for companies.
Of course. Left field question for you, Nisha. If you could have any person or character, alive or dead, real or fictional, as a champion for sustainable supply chains, who would it be and why?
I would say it could be either Patagonia or Unilever's Paul Pullman. They have changed the game for the world. I mean, Unilever for the last 10 or more, they have been the leaders in this. They have done a lot of changes in their supply chain from where they were criticized about their products or the way they dealt, I mean, the small sachets to big products. And I mean, the living plan of 2030 that they adopted is a real example for the world to follow. So Paul Pillman had a different vision. He was not
Mm.
scared of not attending the quarterly meetings. And then he was the one who said, okay, I'm not attending quarterly meetings, but I'm focused on this 10-year plan. So he stuck to his plan and he changed the game. So that would be a role model for supply chain, I would say.
Fantastic. Fantastic. We're coming towards the end of the podcast now, Nisha. Is there any question that I didn't ask that you wish I did, or any aspect of this we haven't covered that you think it's important for people to be aware of?
Yeah, I think one area which I would like to, I mean, which I did not answer properly, or I would say should be given focus, is the ESG audit readiness or the credibility of the data that people put it out there. So the information that is there in sustainability reports today, the PDF reports that we see they are information and they are disclosures for the stakeholders. But until and unless those disclosures are credible or auditable, they have no meaning. So I would say it's very important for companies to keep a track, to actually have traceability of the data from where the data is coming and how they are reporting it. So that would be very essential. And I would like to stress that point for companies that they should follow that.
Very good. Okay, Nisha, if people would like to know more about yourself or any of the things we discussed on the podcast today, where would you have me direct them?
I'm available on LinkedIn. They can reach out to me on LinkedIn and I can share my email address with you. They can even write to me in case they have any questions. Those are most prominent channels that we have.
Perfect. Okay, Nisha, thanks a million for coming on the podcast today.
Thank you so much, Tom, for having me. Thanks a lot.